Welcome back to Investing Talk Podcast. Today, we're taking a focused look at RedCat Holdings, ticker RCAT. You shared some interesting information about this drone technology company, and our mission is really to unpack what's most important for you, the listener, to understand right now. We've got financial results, technical analysis, a company overview. So let's try and synthesize this into some clear insights. So considering the information you shared, what initial observations really stand out to you?
Well, what's fascinating, I think, is the stark contrast we see right off the bat. You've got $4.09 total revenue in the recent transition period, alongside a 57 cents per share loss. But then that's set against this, projected revenue explosion of $80 to $120 for 2025. That isn't just growth. It hints at a potentially dramatic shift in their operational scale, assuming, of course, they can actually realize those anticipated sales of drones like the Black Widow and Edge 130.
That anticipated leap, yeah, it certainly grabs your attention. And it seems like their progress at the Long Beach factory is pretty instrumental in achieving this, right? The fact that they're now shipping drones suggests they're moving from, like, development to actual delivery, which feels particularly significant given their increasing focus on the defense sector. Could this factory progress be the key that unlocks that big revenue guidance?
It's highly likely. I mean, if we consider the bigger picture, that operational maturation directly supports their strategic positioning, their partnership with Palantir, for instance. That isn't just a collaboration. It could represent a significant competitive edge, particularly in the defense market and among NATO allies. Think about the potential for integrating Palantir's data analytics capabilities with RedCat's drone tech. That's a powerful combination. It could really uniquely position them to capture a larger share of that projected revenue.
It definitely paints a picture of them aiming for, well, a pretty dominant position. And it's interesting that they're not limiting themselves to just one drone type or market. With subsidiaries like Teal Drones and FlightWave Aerospace, they have this whole portfolio, right? Black Widow, Tricon, Fang, serving military, government, commercial needs. Reconnaissance, public safety, inspections. It seems like a pretty diversified approach.
It is, yeah. And a key strength within that diversification is the emphasis on their NDAA-compliant FANG drones. In the current regulatory landscape, that compliance isn't just a feature, it's a significant advantage. It could potentially act as a major tailwind for securing government contracts that, competitors might not be eligible for.
Okay, so while the future revenue potential seems substantial, the current stock performance seems to be telling a more complex story.
Yeah.
What's your take on that volatility we're seeing?
Yeah, the stock's recent journey certainly reflects that complexity. A 132% gain over 6 months is, well, remarkable. It indicates strong investor interest at some point. However, that's kind of juxtaposed with a 54% year-to-date decline. Suggests a recent shift in market sentiment, maybe? This kind of volatility often reflects uncertainty about future performance or perhaps a reassessment of those high-growth expectations.
And yet, analyst price targets are still quite optimistic, ranging from $12 to $15. That's a considerable upside from the $6.39 price as of April 1st, 2025, especially with that notable 8.67% jump on that specific day. Looking even further back, that roughly 669% increase from its low is also significant, even though it's still below the 52-week high. How do we sort of reconcile these different signals?
Right, that divergence between analyst optimism and recent market performance is precisely why looking at technical analysis can be so valuable. It offers a different perspective, on the stock's momentum and potential future direction, kind of independent of fundamental valuations.
Okay, let's get into that technical side then. The sources mention a head and shoulders pattern. For someone less familiar with technical analysis, how would you describe what that pattern typically indicates about a stock's trajectory?
Sure. Think of a head and shoulders pattern as a potential warning sign that an upward trend might be losing steam. It forms with 3 successive peaks. The middle peak, the head, is the highest, flanked by 2 lower peaks, the shoulders, which are roughly at the same height. These peaks are connected by troughs, and the line connecting these troughs is called the neckline. Now, a break below this neckline is often interpreted as a signal that the upward trend has reversed and the price is, well, likely to decline further.
And the volume of trading during the formation of this pattern, particularly on that right shoulder, that's a key indicator, isn't it?
Absolutely. If the volume, the number of shares traded, contracts, meaning fewer shares, are changing hands as the right shoulder forms compared to the head, it can strengthen the bearish interpretation. It suggests, weakening conviction among buyers. Conversely, if we see an increase in volume during the formation of the right shoulder, that could actually be a bullish sign. It might indicate renewed buying pressure that could invalidate the bearish pattern.
That's a crucial nuance. Okay. What about the moving averages, like the 50-day and 200-day and the relative strength index, the RSI? How do they contribute to the technical picture?
Right, so moving averages help smooth out short-term price fluctuations, giving us a clearer sense of the underlying trend. If the stock price is consistently trading below its 50-day, and more importantly, its 200-day moving average, it generally suggests a bearish trend. The RSI, on the other hand, is a momentum indicator. It helps identify if a stock is potentially overbought or oversold. An RSI reading above 70 can suggest the stock has risen maybe too quickly, might be due for a correction, while a reading below 30 could indicate it's oversold and might be poised for a rebound.
So given these technical signals, the source material suggests a hold recommendation currently. What specific technical events would need to happen to shift that to, say, a buy or sell signal?
Well, from a technical perspective, a decisive break above the neckline of that head and shoulders pattern, especially if accompanied by a significant increase in trading volume, that could be seen as a potential buy signal. It would suggest the bearish pattern has failed and the upward trend might resume. Conversely, if the stock price breaks below the neckline, particularly with contracting volume, it would likely reinforce the bearish outlook and could be considered a sell signal.
Okay, that gives us a clearer picture of the short-term market sentiment. But let's circle back to the fundamental health of the company. We noted the impressive revenue growth, but that negative return on equity. That's a significant point of concern. Can you elaborate on what that means for investors?
Certainly. The rapid revenue growth, outpacing the industry average significantly over the past 4 years, that indicates strong market demand for their products. That's positive. However, the negative return on equity at negative 100.41%, that is a red flag. ROE essentially measures how effectively a company is using its shareholders' investments to generate profit. So a negative ROE, especially one that has declined from previous levels, suggests the company is not currently generating profits relative to the capital invested by its shareholders. Now, while negative ROE can be common for high-growth companies investing heavily in expansion, the fact that it's worsening suggests those investments haven't yet translated into profitable returns.
And they also don't currently pay dividends, which kind of aligns with a growth-focused company that isn't yet profitable. So we have this dichotomy, strong top-line growth, but struggles with profitability on the bottom line.
Precisely. And this highlights the balancing act for investors. The rapid revenue growth and promising market positioning, particularly in the defense sector with those NDAA-compliant drones and the U.S. Army's SRR program, those are compelling strengths. However, the negative ROE and the inherent volatility of the stock price represent significant weaknesses that need careful consideration.
It's interesting that despite these profitability challenges, the consensus among analysts is still a buy. Although the insider activity showing more selling than buying over the past year, that adds another layer of complexity, doesn't it? It's not necessarily a definitive indicator, but it's certainly something for listeners to know.
It is, and it's crucial to remember RCAT operates within a competitive landscape. You have established players like AeroVironment and Kratos Defense and Security Solutions. Their ability to not only win, but also profitably fulfill government contracts and continue to innovate will be critical for long-term success in this sector.
Okay, looking ahead then, what are the key factors you'd advise our listeners to watch for? Things that could significantly impact RCAT's future performance.
I'd say keep a close eye on any announcements regarding new product launches, particularly within their NDAA-compliant line. Also, any news of significant government contract wins. These could act as major catalysts for revenue growth and potentially improve investor sentiment. On the risk side, be aware of potential shifts in government regulations concerning the drone industry, and of course, the general volatility of the market, especially for these growth-oriented stocks. Ultimately, the key indicators for long-term success will be their ability to maintain that impressive revenue growth trajectory and, crucially, to demonstrate a clear path towards improved profitability and a positive return on equity.
So, for you, the informed learner, RCAT Holdings presents a compelling narrative. High growth potential in the burgeoning drone tech sector, especially defense. The strategic partnerships, the focus on government contracts. They offer significant potential upside. However, the current financial metrics, particularly that negative ROE and the stock volatility, they definitely warrant a cautious approach. The technical analysis seems to reinforce this, suggesting a hold position pending clearer market signals. Your focus should probably be on monitoring their progress and converting that revenue growth into tangible profits and any developments regarding key government contracts and product advancements. These are crucial elements to consider as you continue to stay informed. If you found this focused analysis helpful, please do subscribe, like, and maybe comment to let us know what other companies or sectors you'd like us to explore in future discussions.